So after the FOMC news and Fed rate cut event happened, this was how the daily candle closed. Even though it closed bearish, it still shows that the buyers were in control, looking for buys from this daily candle close. This is a bullish fair value gap. It closed above it, and now that confirmed how I was going to look for buys. You can see even though the fair value gap is small in the S&P 500, there's still fair value gap right here. So that showed that now we were looking for buys. If you go now into a daily time frame, we have seen how the market closed after the FOMC. Now we're going to drop to our 1 minute time frame. Since there was a news event, I'll be looking for news, red folder news days, and I'll mark what time it happened. And this was when there was unemployment claim, and it came out around 8:30 a.m. New York time. So I would mark my 8:30 New York time to see where the market went. That was the 8:30, and usually I trade the 9:30 a.m. open, so I'll mark my 9:30 also. And we also have the 9:30 from here. If I'm looking for buys, I would initially look for this liquidity to be swept. This is the London low and the Asian low. This was my point of interest, to be swept by the market, and for me to go long, I would mark my London lows and my Asian lows. Okay, one thing you can notice from here, the market swept the Asian low and the London low, but here from NQ there was no sweep. This is the Asian low, they were not swept, and this is SMT. I'm usually looking for SMT, and you can see it happened where the lows were not swept. This is the Asian low and the London low, so that I will mark as my SMT. Now when SMT happened, you can see now I'll be looking for an inverse fair value gap at specifically this time, and this was the high that was broken. Even though it's still inside this leg, I was still looking for reversal, and you can see the market was really pushing higher. So from this high to this low, this is the discount, and we have this as our fair value gap. We also have this inverse fair value gap. I was using the inverse fair value gap as my entry point, so we have this as my inverse fair value gap, and the market tapped into it, and I took a long position. My stop loss was at the low, swing low, and I was targeting the 8 a.m. red folder news right there. I didn't care my risk to reward, I just have points of liquidity to target, so risk to reward can be whatever it is. On a consistent basis, it's usually 1 to 2. Once the red folder news high has been reached and swept, I'm out of the trade, and that's how I was able to trade SMT and using liquidity sweep. So the market swept, inverse fair value gap, and then high, targeting the 8 a.m. news, red folder news right here. And that's how I traded the unemployment claim news. Write something under the comment to let me know if this is something you look to trade, or this is something that you think can be profitable in the long run. If you didn't understand anything, put it also in the comments so I can also make a video on it. Thank you, and your support is greatly appreciated.